It's almost like I
morning.
timed
Morning, good
that
morning.
song perfect.
Morning.
Good morning. Well, I gotta say, y'all, like 80% of the country is freezing today, and not us.
Nope, that's why we're
That's
here.
awesome. All right, let's jump in. We got a big day today, and I got a lot of articles for you, so let's hit it. Okay, Broward County, single family. Uh, Active inventory went from 939 to 902, but it's still up from like a month, the previous month. We were under 900 for quite a few weeks. So it sure looks like, just quick snapshot here, people are still listing left and right. I mean, we have held listing numbers for a period of time that we didn't expect. We talked about that at stats last week. Um, and it's still showing, right? Like active under contract 193. Is that a big number to y'all?
Yeah,
It's a huge number. We did 150 the week before. We had 191 the week before that, 182 the week before that. But you can look on the chart, it was a lull prior to. So sure looks like my comment around the market heating up. If I just look at this, it looks as if the market is getting faster. It's moving faster, right? Pendings are at 140, 157 the week before, 175. So some of these are closing out, and you see these in the closing numbers. We were at 241 2 weeks ago, 286, and then 268. I need to zoom in. There you go. 266, 268. Um, those are great numbers. I would love it to be over 300. I think we're on our path to getting back over 300. Yet I'll take what we're looking at here for sure. All right. So obviously, a lot of canceled withdrawals are in the marketplace today. Certainly in a TCPA friendly way, that is a big part of our business. We looked at stats and there were some price points that one out of every two listings was not going to sell. So that on one hand, if I'm a listing agent, is a little bit of caution. But if I'm a lead generating agent, that's money in my pocket, meaning I got people to call, expired listing appointments to set. It is a big part of a business model of people that are willing to handle rejection, willing to work on scripts, dialogues. It is certainly a part of business. All right, moving faster. Condos, Broward County broke 1,000 in active status changes. That's a big number. Again, listings are coming faster right now. 97 active under contract, a little softer than what it was, but still a good number. 103 on the pending. We were 127, had 176 close out this week. A lot of movement in the condo market. If you were at stats, we talked about that. Like the condo market is uh, ever so slightly improving. Let's run over to Miami-Dade. Miami-Dade single family, 831 on the actives, a little bit up from last week. We had a couple weeks here where we were over 850, 830 is solid. 111 went active under contract. We've had 4 or 5, quite a few weeks over 100, 110, where we had that month of September, which we were under 100. So improvement there. 167 on the pendings, a little bit down from last week, but probably closed out, right? But 167 is healthy. If I go down to condos, Miami-Dade, 1,040. So Miami-Dade had 1,000, sorry, I scrolled, 1,040 active status changes on the condo market. There's a lot of movement there. All right, who's drawing again? Southeast Florida Joy. All right. As long as you're drawing age appropriate pictures, I can deal with it. All right. So 1,040 on the active status changes, 90 active under contract. Uh, Look, I mean, on the condos in Miami-Dade, we were having 50 or 60 go under contract for the second half of the summer, and we're getting close to having a triple digit week on condos in Miami-Dade active under contract. We've got 148 on the pendings. If you look over the last 3 weeks, that is a good visual of the market getting hotter.
It's the biggest it's been since you've been tracking it with us.
Yep. Closings 180. Um, we had 207 the week before, end of month. Um, Man, I just think, you look for the trends in these numbers. I pull these numbers up and I'm like, 1 week doesn't really tell the story. But when you start to see the trends, when the more data we get, it gives you a really cool perspective of, are we getting hotter? Are we getting cooler? Is inventory growing? Is inventory slowing? You get to see all those things. All right, Palm Beach, 800 active status changes on the single family. They've been over 800 for 2 weeks now. We were 800 in the summer. So kind of consistent with those numbers. 224 on the active under contract. Huge number, single family Palm Beach County. Pendings 108, 121 the week before. Looks like it was slowing down on the pendings, but speeding up on the active under contracts. Yet closings 309 last week was huge in that county. We did 228 this week, which is pretty much the same we did 2 weeks ago. Um, Bouncing around a little bit, but it is what it is. And then when I get down to condos, 783 on the active status changes. That's a big number for condos in Palm Beach County. 101 on the active under contracts, which is triple digits, I think is a big statement for Palm Beach. 74 up from last week from 58 on the pendings, and 161 at the month end close, and 118 2 weeks into the month. There's a lot of movement going on. What do y'all see? What do you feel? Maybe, what do you feel?
I went to a listing appointment this weekend in Kendall, and these clients they see what Zillow and everybody else is putting up there. But my question was to my seller was, what do you need now? What do you want? And when I found out what she needed, it made it easier to the point where she walked me down the street and showed me that there's somebody else that may need to get their house sold. So if you go out there and you go look for something, you may find more than just a listing. You may find somebody else that need help.
I love that, Maxwell. Thanks for sharing. Anybody else?
Closed sales is on single family housing here in Broward County. It just seems to be strong.
Yeah.
The numbers continue to rise. They're almost double what they were in August. September was the strongest month of the year. We're certainly feeling it. And we've been telling our clients, look, so many people were pulling their houses off the market. They're going to start to relist in January. Let's get ahead of this wave of inventory that's coming because the buyers are here. The buyers are here right now.
100%. Dan, what I love about this dialogue is one of the goals of this call. Rick and I've been doing these calls for a long time, but we just started doing these last couple months, obviously, with y'all. But I hope you're picking up dialogue from these calls that translates to a conversation at a kitchen table, that translates to a conversation at Starbucks with a buyer. Like we want you to be getting the dialogue figured out on these calls so you can have that data rich market expert conversation when you're client facing, right?
Yeah, absolutely. Absolutely. And the data is so key in and it's monumental in being able to have that dialogue because all you have to do is sit there and talk about the numbers. I think I mentioned at Stats the other day, I'm going to be teaching a class in Coral Springs on how I use this data to win listings. And I mean, just looking at the numbers in the condo market and how closed sales has literally doubled from just a month or two ago. We know that we're coming into the season where the Northerners are starting to come down, but I mean, I have people that I can call. I think it's a time to start stacking up condo listings.
I think it's always a time to stack up listings in real estate, for sure. But one of the interesting things, I heard a couple agents tell me recently, I think it was either Thursday or Friday, that they were passing on listings. And I understand that there's certain listings that aren't sellable, and it's probably the right thing to do to pass on them. Yet, if you're passing on listings thinking the market's bad, that's a giant error.
I can tell you that on my listing that I had, look, 13 offers, 15,000 over asking.
Yeah,
Buyers are out there. You just got to price it right so they can come to you instead of you having to go through them.
there you go. Rick, you got any
100%.
thoughts?
I mean, it's all about getting your unfair share. And what I see in the data is optimism and opportunity. And it also, to your point, directs some of the narrative you might be using in your social media or your database communication. And so, make sure that you're attacking what they need and want, and then asking questions. And to Dan's point, and Max actually said it, you've got to be present to ask the question or you won't get the answer. So it's about activity, it's about engagement, it's about targeting. The other thought is inside of, you see something like Miami condos or townhomes, that's a big picture. I mean, I still recommend, targeting the inside of that picture. There are still micro markets that are doing better than others significantly. And so fish the most fertile ponds and find ways to communicate that attracts those opportunities.
There you go. Wise wisdom there, sir. Okay.
Thank you.
NAR publishes this once a year. Just came out. It's the NAR 2025 Profile Home Buyers Sellers and reveals market extremes. Here's the thing. It's a giant report, guys. I'm not going to pull it up and even try to go through it on this call. However, you should pull it up and you should go through it. And I'm telling you, the top producers take this report and customize their strategy based on what the report is telling you. And it tells you how people are finding their agent. It tells you what the profile of people buying looks like first-time home buyers versus move up versus like it gives you a looking glass into how to be strategic with your lead generation plan going forward. Natalie,
It
you got a
makes
question?
Hi, where do we get this? Can someone email it to everyone?
Do you have Circle?
Yes,
It always is in Circle. I promise.
but where?
Florida
Like
Resources.
post it as
Florida
an
Resources.
When you log into Circle, go to Florida Resources.
Okay.
I thought this was awesome because it gives you an exact image of where you should be targeting your marketing messaging. If you to tell, hey buyers, this is what you want or need, it's better to know what they want or need and land the plane. Like negotiating skills. I mean, they give you the list and the percentage that consumers value the most. Make sure your marketing has that on the buffet.
Mm-hmm. All right, so I'm going to click this next article, but before I do, on Friday at Stats, we were talking about how unemployment on a national scale is starting to rise. And that is one of the variables that the Fed looks very closely attentive to when they're making monetary policy, right? Well, I found this article, or somebody sent me this article. It says tracking unemployment insurance claims. And then there's a chart down here that says 166% increase in Kentucky. And Florida is not even on the top 10 for states that are having like big increases. And then continued claims, Tennessee is 30% of it, and Florida is not even on the top 10. So in that regard, while our interest rate environment is going to be impacted by the national climate, it doesn't always translate hyper local. And so you may hear people talking to you going, "Oh, I'm worried about losing my job," or unemployment's going up, and they get fearful. This would be a great article to say, yes, and not where we live. Make
Yep.
sense?
100%. Well, and that's the
Local.
danger of reading, the national news. It doesn't necessarily target the experience you're having locally, and consumers are affected by national news. By the way, Luke just dropped the link to the NAR report in the chat, Natalie, and anyone else that wants it, you can click it real quick and drop it into your click and drag.
There's Luke for you. All right.
Go Luke. Go Luke.
This is an FYI. So real estate, the lead aggregator game is, we try to help you navigate the noise. So you've got the realtor.coms, you've got Zillow, you've got homes.com, you've got all these big companies that want to sell you leads, and you're trying to understand where to put your money. This article talks about how realtor.com, while uh, the unique visitors has gone backwards so slightly as like 6.5%, they're still having 72 million unique monthly visitors on a recent quarter. So realtor.com, in my opinion, is still a very good option for real estate agents for lead sources, and it's been overshadowed by the giant Zillow. Yet maybe realtor.com is an option for agents in the future. I just threw this article on here to just kind of bring it back to the forefront because somebody's talking about it and maybe it's something to look into. Make sense?
Yep.
All right. What do you make of this? I was watching football yesterday, sitting next to a guy from New York, and I showed him this article, and he said, "Yeah, we all think our housing market's going to tank in New York, and everybody's moving to Florida." And I think what everybody's doing is buying houses down here, but keeping their properties in New York. But I just think it's an interesting thing because we noticed, once again, I keep referencing the stats event if you missed it, but New York obviously is the second most visited location from Miami or Fort Lauderdale on Zillow looking at property here in South Florida. So obviously your local people are the giant share of people looking at real estate in South Florida, but New York is a hot number two. And we don't need to get into the politics of this, but the reality is, what's the strategy of this? And this article talks about that a little bit. All right, this is fun. Are you aware of what a VantageScore is? So everybody probably knows what a FICO score is. And FICO, in a weird way, you might think it's like a government company, but it's actually it's a company that almost has a monopoly on how credit is interpreted for lending purposes. And VantageScore is a competitor to FICO, and the government is super motivated to revamp the housing finance agency or the finance agency climate to move them more towards this VantageScore. So I just wanted you aware if somebody tells you, something about a VantageScore. VantageScore is the competitive product to FICO, and it's probably going to become more and more accepted. Like Pulte, the builder, announced via social media that Fannie Mae and Freddie Mac would accept VantageScores immediately. It's just something that's starting to make its way into our world, and you just need to be aware of it. That's all. All right, so before I click this next slide, I'm gonna tell you about, Rick, fact check me, but I think it's been going back about 2 years now. I've been predicting that they're going to come out with a 40-year mortgage. And I think the motivation in that is strictly affordability. Yet, I saw this article yesterday. They are now trying to propose 50-year mortgages. And what do we think this would do? So Luke sent me, let me see if I can pull it up real quick. Luke sent me a screenshot this morning of.
Well, interestingly, Brett, while you find that inside of this article, it depicts what a $300,000, $400,000, and $500,000 mortgage, the effect or impact.
Yeah.
And I was surprised by there you go. So
That's it. That's what I was going to say.
Yeah, I was surprised that the difference wasn't greater. Truthfully.
I was too. I was like,
I thought it was going to be like
$300.
a game-changing moment for affordability and capacity to, for entry-level buyers. And at the lower point, it's even less dramatic.
Yeah.
Lower price.
And Brett, I was listening to the radio on the way in, and they were talking about this very thing. And the two radio hosts both said the same thing. They were surprised it wasn't more of a savings. So this is getting out quick to the public.
Yeah.
Think about it, guys. By extending your mortgage period, all you're changing is the principal, which is pretty minor compared to what your interest payments are on a mortgage. That's why it's looking like this. And the end result, and what you've got to know in talking to people, they're trying to appeal to the first-time buyers to lower their payments so they can get into more homes. But with this type of plan, here's what I'm scared about. You're building your equity extremely slowly.
Yeah.
In a 50-year mortgage. And you buy a house today and you have to sell in 5 years. You've at least currently built some equity in your home. With a 50-year mortgage, 5 years, you haven't built diddly with your equity. And it might create more short sales than we've seen in a long time.
You're counting on appreciation as your real sole driver for investment justification.
That's it, Rick.
And if that happens, it certainly can lead itself to more short sales, more REOs, and I don't think it's a what do they call it? Subprime loan. I think it's a government-backed loan, but it's still, whether or not it's good or bad is up for debate at this point.
Yeah. Well, we just have to understand how to explain it to our buyers.
Yep.
Yeah. All right. There's even, most of us, I'm sure, know this, that if you pay an extra payment, one payment a year, pay down your principal, you cut your 30-year mortgage to like 24 years by just 1 month. That's how it really goes back to consulting, right, Richard? You nailed it. It's about having a quality conversation so that people are empowered to make the best decision. What I do like is it gives you yet another thing to talk about and reason to call.
And it's not just about savings. It's also about increased purchasing power, right?
Yeah. So you could buy a more expensive house. You're saying?
That's correct. Yes, because right now with with home prices increasing and kind of being out of range for a lot of these buyers, the difference in that payment was over 10%, and it's not necessarily, for me at least, it's not necessarily about how much they're going to save by going to the 50-year mortgage. It's about how much it increases their purchasing power on the purchase price. to
You
help
know,
them
Dan,
get the
that's
home
a-
that they want.
That is a strong point that I didn't think about.
Yeah, qualifying
Mhm.
ratios.
Yeah. All right. This article on South Florida Business Journal is the 5 hottest housing markets in South Florida. Bal Harbour comes in, I believe, #1 as the hottest housing market in South Florida for the third quarter. There's a list in here, if I'm not mistaken. Here you go. Details South Florida's hottest market, Bal Harbour. And then the 5 hottest zip codes in South Florida were Bal Harbour, Pompano Beach, Boca Raton, Weston, and Pinecrest. Do y'all experience that? Do you agree with that? I mean, I guess data doesn't lie, but
Pompano's on fire right now.
yeah.
Is on fire, and then Bal Harbour makes sense because it's a hyper luxury area. So it's all the people that were waiting for a few years that are buying now.
There you go. All right. Last article, maybe I shouldn't have saved it for last. The homeowner equity boom is over, but a troubling metric is inching up. Equity rich homeowners decreased to 46% in Q3 2025, but seriously underwater mortgages increased to 2.8%. So Rick, back in the heyday when you were a REO focused agent, what percentage of the market was underwater mortgages?
Well, better than a third of the inventory was a foreclosure that was on the market. So I don't know the total gross number, but the net was about a third were REO, a third were short sale and bank facilitated, and then a third were traditional, had a little bit of equity or some equity to work with.
And that's in the 2010.
That was 2009 and 10, yeah.
Yeah.
So
Rick, do you call what the historic average is for foreclosures?
I should know that, and I'm not going to speak to the global market.
Yeah,
I just remember the percentage of available inventory was a third were foreclosures. It was a
Yeah.
massive number. So if there were
was-
1,300 houses were bank owned, and then a third more you had to navigate a short sale with a bank to liquidate or sell. So 65% roughly were underwater.
Yeah, it was a huge part of our business back then.
Yeah.
But here's what, when I keep commenting to the agents, it's a matter of perspective and understanding how the media reports numbers. When they're going seriously underwater, mortgages increased to 2.8%. It's like you've got to realize when mortgages were at 3%, foreclosures or seriously underwater mortgages was 0. And it ran at 0 or pretty close to 0 for a number of years. So increasing off of 0 looks pretty damn serious. But 2.8%, I want to say that the long-term foreclosures is about 4.5%.
that's like a 50-year average, Richard?
Yeah,
Yeah.
somewhere in that range. There's always going to be people who, pulled their equity out of their house to buy the jet skis or the boat or to go on vacation and then have to sell for some reason. There's people that are in, bad financial troubles because of medical issues. You've got things like that always going on. But when you've run, like I said, you look at all the people that had 3% mortgages and anything increased from that is serious, you're looking at the same thing with that number. So I wouldn't be too upset by it at this point.
No, I think we were running less than 1%. I don't think it ever was 0.
That was an exaggeration, but
well,
I know. But to go less than 1% to 3% seems like a big increase. But to your point, Richard, I think 4% is probably standard.
Yeah, I'm not even sure 1% is healthy. Like it's good to have a little bit of stress in the market if you're opportunities, and like everyone can't win. That's just not how it works in the world. But I did AI the 2009, 23 to 20% of all residential properties with mortgages had negative equity.
Yeah.
But that doesn't mean foreclosed, because a lot of those hang on, and we all know it's not, if it's when your market rebounds or the market rebounds and your valuation returns.
There you go. Well, I know I'm spending time today with the top 10% agents, and we love all of you, and I hope you're getting value out of these calls, and I hope you take action and go do something with it. And we just appreciate you showing up.
Thanks, guys. Good to see
All
you.
right, guys.
You
So
got it.
much, y'all.
See you this afternoon.
All right, bye.